Well, it has huge implications for real estate, which is, if you look at what's already happening, there's kind of a donut effect around the biggest cities in America. So take San Francisco, nearby where I live. Downtown San Francisco, right in the heart of the city, is having a commercial and residential real estate apocalypse right now. So rents are down by almost 30%. And why is that? Because if you only need to be in the office right now, basically no days a week, but longer run, say 3 days a week, you don't need to live in the central business district. You can live, say, an hour away. What's doing really well is the suburbs of nice cities.
It's my pleasure to welcome Nicholas Bloom. He is a William D. Eberly Professor of Economics at Stanford University, co-director of the Productivity, Innovation, and Entrepreneurship Program at the National Bureau of Economic Research, and senior fellow at the Stanford Institute for Economic Policy Research. Nick, welcome. How are you?
Great. Yeah, thank you for having me on the show.
It's good to have you. And you know, it's interesting because both you and I have been doing a lot of thinking and research and just pondering what is changing in the world of economics, especially as it relates to real estate. You've been talking a lot about remote work, and you know, this was already happening, of course. COVID accelerated it. I think that the civil unrest, the riots accelerated it as well. You know, just give us your broad thoughts, and then we'll dive in more deeply.
Yeah, so I mean, COVID has just been an explosion of working from home. I'm going to talk a bit about numbers, and just to explain, I'm not pulling these from thin air. I have been doing a long research project with co-authors from ITAM in Mexico and Chicago, where we've been interviewing 2,500 Americans aged 20 to 64 that earned $20,000 or more last year. So you have this panel of people we've interviewing, 2,500 of them per month, plus around 1,000 firms, and talking to a bunch of execs. And, you know, some basic stylized facts is working from home has absolutely exploded. So pre-pandemic, 5% of full working days in the US were working from home. So it's very rare. 95% of days on the business premises. At the peak of the pandemic, that went up to 60%, which is like an enormous increase. So America during May, June, July, April was basically a working from home economy. Right now, it's back down to around 50%, and we forecast eventually it's going to drop back down to around 25% post-pandemic. So sure, it's going down, but just to point out, there is a sea change versus a year ago to what we're going to see after COVID, with a dramatic increase in working from home.
Yeah. Okay. So what does that mean? I mean, back in 2012, you might find this interesting, Nick. I was saying to our listeners that geography is less meaningful than it's ever been in human history. And of course, it's still meaningful. Look, I'm a real estate guy. We all know the three primary rules of real estate: location, location, location. And location is still important, but those expensive locations are not as important as they used to be. And by the way, just so you know, for context, the reason I was talking about this back in 2012 was in relation to autonomous vehicles. You know, when you have a self-driving car, it's not so important to be close to an office, even if you have to go to an office. But nowadays, we've totally disassembled the whole idea of an office in general. And, you know, I've been working on and off at home for a long, long, long time. But a lot of people, you know, just weren't doing it. They didn't like it. When Marissa, I can't think of her last name, Yahoo. Yeah, you know who I meant. When she took over at Yahoo for her reign, you know, she said, everybody come back to the office, right? And she didn't like the remote workforce. But
I actually interviewed her. So I spoke to her about a month ago at some detail. So I can give you, exactly as you're going, this has a huge impact on real estate. So why don't I, to preface what I'm going to say, explain what the future of work from home looks like, from, endless just talking to execs like Marissa Mayer, like Eric Yuan, the CEO of Zoom, etc. So the story we see is, right now, there are two types of workers. There are those that can work from home, me and you, and probably honestly, most of your listeners. They tend to have a college degree. Under the pandemic, most of them were. They're about half the population. The other half of the population cannot work from home. They tend to be lower educated, lower earning, like think of people work in shops and factories. On the first half, which is basically everyone that is listening, post-pandemic, the huge majority of firms are saying those folks can continue to work from home, but something like 2 days a week. So basically, CEOs say, look, under the pandemic, you have no choice. You got to work from home. You don't want people getting infected. Post-pandemic, there's a big problem with full-time working from home. It's hard to be innovative. It's hard to be creative. And we have a problem with company culture. We want you back in the office, but you only need to come back 3 days a week. So the typical model is you're going to be back in the office, say Monday, Tuesday, Thursday. We're going to have all our meetings and client events and trainings then. Wednesday, Friday, say you can work from home. So what does this mean? Well, it has huge implications for real estate, which is, if you look at what's already happening, there's kind of a donut effect around the biggest cities in America. So take San Francisco, nearby where I live. Downtown San Francisco, right in the heart of the city, is having a commercial and residential real estate apocalypse right now. So rents are down by almost 30%. And why is that? Because if you only need to be in the office right now, basically no days a week, but longer run, say 3 days a week, you don't need to live in the central business district. You can live, say, an hour away. What's doing really well is the suburbs of nice cities. So where I live in Palo Alto is actually doing very well. East Bay is doing really well. North out, beyond Berkeley is doing really well. The same with big cities across the US. So a lot of people have made the, very rational decision. If I'm only going to come into work 3 days a week, I'm less exposed to my commute, and I care more about the quality of my home. So if I was to invest in commercial real estate, I would be going, short, as in selling stuff right in the central business district, the very heart of downtown Manhattan Island, and actually buying up the stuff that's about an hour outside. And that's, exactly what the market's doing.
So first off, we don't know if that whole idea of, hey, you need to come in, post-pandemic, that's just what, managers are sort of wishing for, because they're not used to managing a remote workforce yet, right? They're getting used to it. And there are all kinds of great technology tools that make that more plausible nowadays. But, they might be saying, okay, come in 3 days a week after the vaccine gets widely administered or whatever. Maybe, we get herd immunity or whatever, right? But, that might change. And the thing that's interesting about it is that we're just seeing phase one of this now. When people are working on Zoom and they're, maybe they moved 30 miles away from work versus they used to live 15 miles from work, but they're still in a very expensive real estate market in your area, for example, or, around New York, right? All those markets are still very expensive, even if they're not in downtown San Francisco or downtown Manhattan. But, they're going to start to think, well, if I'm communicating at the speed of light, does it even matter? Can I just be 500 or 1,000 miles away and live in a much, much less expensive location where I can get some more land, some more breathing room? Maybe they'll decide that they like suburbia. And in the cities are offering a lot less than they used to, right? A lot of these businesses won't reopen that made the city attractive, right? A lot of the restaurants won't reopen. San Francisco, New York are certainly having that problem. Thoughts? Like phase two of
no, exactly right. So I'm actually working on a paper right now. It's about to go out like this week, called Why Working From Home Will Stick. So to be clear, working from home was already on an upward trend. So it was doubling roughly every 12 years before the pandemic. The pandemic has accelerated kind of 40 years of this. So what you hear from managers and then surveys from employees is, we actually like working from home, but we also like being in the office. So full-time in the office, which is pre-pandemic, is kind of dead. But I think full-time working from home, we all, for many of us who are experiencing this, is not perfect. And a lot of people are getting depressed. The three complaints we hear from managers is depression, innovation, and issues around company culture. So I think long run, it's going to be much more of a mixed mode. So if you think about what you do on a day-to-day basis, there's a certain amount of work that's with other people that's more effective to come in, and there's a certain amount of work that's on your own, reading, report writing, and it's often not critical. And that work can be shuffled into a couple of days a week. So, then the question is, where do you live? So on the one extent, you could say, look, well, let's all move to Wyoming or Alaska, the great wilderness. The problem is, coming in for those 2-3 days a week is incredibly painful. In fact, I've interviewed firms that have...
If they're going to come in, that's the sort of the question I'm posing, but okay.
I think the experience now speaks from... sure, there'll be some firms like Quora that said they're going to be fully remote, but they are the very small minority. And in fact, there's a friend of mine, Chrissy Johnson, that runs, I've spoken to 2 or 3 companies that run entirely remote firms and were doing it before the pandemic. And what they used to do is they would meet up at Houston Airport or Chicago like once a month for a couple of days to socialize, because they just couldn't quite do it without any face-to-face time. So I don't see most firms going to fully remote. It just is not what managers want. It's not what they're telling us. They're not entirely happy with it right now. And so, sure, I'm not saying there aren't some outliers, and there are also some other outliers like Netflix. Reed Hastings says he wants basically everyone back in the office full time. The typical firm is going to slowly slide back into 3 days a week. I just don't think they'll go beyond that.
Yeah, right. So that's the work from home component. Anything else you want to say about the work from home component? Because I'd like to talk about, the economics in general, talk about, the money printing and the possibility of inflation or what's coming down the pike.
No, sure. I mean, the work from home is kind of like, it's still true in America. You want to get the right city. If you just look at the growth of cities and the economies of certain areas, the coasts have done really well. But it's less true you want to be right in the center of those cities. I think, urbanization is, the center of cities have done fantastically well over the last 40 years. I remember going to visit the center of New York when I was in the early 80s with my parents on holiday, and it was super scary. It was like there are 2 armed guards in McDonald's on Times Square with guns because it was so dangerous.
Well, New York is getting scary again. I have a lot of friends that live there, as I'm sure you do.
So that's exactly right. So cities are going back. They're nowhere going back to 1980. They're maybe going back to where they were in 2010 or 2000. So they're still going to be more expensive and denser. The centers aren't going to be quite as extreme. And the discussion of the words affordability crisis seems to have come to an end. So donut is really the way to think about it. The suburbs are back and the centers are not dead, but they are not going to see the rampant growth they have over the last 10 years.
Mm-hmm. Okay. What about the broader economy? Talk to us about that, if you would, especially what we can expect in the future.
So, there's 2 phenomena going on. One is what I call like the square root recession. So basically we had a massive drop, as we know, in the middle of this year. We got about half of it back. So quarter 2 2020 was horrific. GDP is down about 15% versus the end of last year, actually. We got about half of that back in quarter 3. But then the recovery at this point is kind of petering out. So this is a square root sense in which you had a big drop, half a recovery, and then it's moving sideways again. And so that's the big trend. And it's going to take another probably 4 or 5 years, I've thought, to get back to where we were in 2019. So much as we saw the last time around 2008, 2009, it took almost a decade to recover. I think it's going to take about 5 years at least to recover. And why is that? Well, once firms go bankrupt, it's hard to restart those companies. When people lose their jobs, it's hard to get reemployed. The other shorter run fluctuation is obviously what's called the W-shaped recession, the second lockdown. And, out in California, I'm sure the whole country, there's just an explosion of COVID right now. And so that is going to basically kill the end of this year and the beginning of next year as lockdown accelerates. So we're in for a kind of a second mini dip. And then presumably when the vaccine rolls out in March, April en masse, we'll see a bit of a recovery. But the bigger picture is we're on the right path, but we are not going back to 2019, I don't think, for another 3, 4, 5 years. Certainly not in terms of things like unemployment.
Some people thinking more conspiratorially, of course, think that the powers that be have really taken advantage of COVID and made it a much bigger deal than it really is. You've heard all these arguments, of course. I'm just wondering what you think about that. And the component of that that's really interesting to me is that in the latter part of 2019, the repo market was signaling very dire problems with the economic machine. And then this came along and everybody stopped talking about that. It's interesting, to say the least. Is this maybe, been a good opportunity to sort of paper over other problems that were already there but weren't seen by the general public yet? But the people in the know that understood how things worked, in the system, were really talking about the repo market and how it was just collapsing in the fall of 2019.
Yeah, I mean, there are long-run trends in the US that were not healthy. So just to be clear, if you look at, for example, growth and productivity growth, it's been declining slowly over the last 50 years. And you see that in the last 20 years in interest rates. So interest rates are incredibly low even before the pandemic. They were kind of glued almost towards zero. And repo markets and other bond markets don't work that well with incredibly low interest rates, and particularly when things go negative, various markets and banks have problems even dealing current and capital accounts. So there are already issues. I mean, my own personal view is there's a huge debate about how much to lock down. Early on, to be honest, I wasn't so certain we wanted such an extensive lockdown. I think by now it's pretty clear we would have been better off having a much faster and more aggressive lockdown if you look at Asia. So Asia is very tough, managed to lock down aggressively in a way that would never fly in the, you can hear I'm British. It wouldn't fly in the UK, Europe, the US, people, there's some sense of personal freedom, which is good. I like our society that way, but it meant it's hard to have the full lockdown. As a result, the virus, it's kind of like a fighter. You keep punching him, he falls down, but you never knock him out. And so he keeps coming back up. It's like those horror movies, the deadly monster never goes away. Unfortunately, this virus, what's happening now is we're having a resurgence. And, whether or not you want to regulate, you would just see consumers and workers from talking to firms don't want to go out and get infected. So the best way to honestly, fix the economy is to get rid of the virus. And by now it's lockdown in the short run, but the main hope we're all pinning is on vaccines.
So more unemployment, more small business closures. I mean, there's this massive consolidation going on. I mean, this is causing, the big businesses, they can survive, they can issue bonds. The stock market is doing great, but small businesses can't survive this. What do you think that means for our future?
You're completely correct. So, there's two phenomena going on. So one is size and one is the stock market. So just on firm size. So I have some surveys with, different companies, including with Stripe, the payments processor. And you see very clearly big businesses have done less badly than small businesses. So offline, small businesses have been hit, horribly. Larger online businesses have done much better. And the stock market's obviously the extreme version of that. So if you look at the stock market, 30% of it's high tech. And those firms have done really well. I mean, this has been a boom for, Amazon and Microsoft and Facebook, et cetera. So yes, that's an issue. And I think it's an issue because of things like, antitrust and competition. I don't think now, as in, December 2020 is the time to deal with this. But much like if you cast your mind back to 2008, 2009, because of the global financial crisis, we had too much banking concentration. By 2021, 2022, we're going to have a kind of hangover effect of the pandemic that we're going to have too much concentration in markets. So yeah, I think, antitrust, encouraging new business creation is going to be important because we've lost a lot of small businesses and we have very concentrated markets. So that's not good. But in the short run, I guess I'd focus on kind of getting through this, and in the longer run, come back to deal with high concentration ratios.
Yeah. And if Biden does become president, by the way, there's going to be no appetite for this antitrust, movement against Google. That's just going to evaporate, I'll bet, which I think is very sad because I think these companies have way too much power, and I think they're abusing the power. Now, you may disagree. You're sitting at Stanford, so I know a lot of these people are your students and so forth. But I just think the big tech companies are becoming pretty scary, frankly.
No, I mean, they are. They're also put in an incredibly hard position on regulating what isn't and is not. I mean, the tech companies, and Mark Zuckerberg, just take an example, never set out to be, controlling what is and is not said online, or Jack Dorsey at Twitter. And I don't have a solution. I'm aware of the problem. I mean, let's see, I'm generally pretty free market. So I'm somewhat nervous about going up and ripping up all of these companies because historically it hasn't worked out well. I mean, government, does not have a great track record at going and breaking up large successful companies. But
well, I couldn't agree with you more, but unfortunately these giant companies have armies of lobbyists, so they've become the government. And interestingly, the government can use them by exchanging favoritism, of course. We won't bother you and we'll let you run your duopoly if you'll do the censorship for us. See, the government can't censor speech, but they can use tech companies as a proxy to censor. So there's all kinds of strange bedfellows and things going on. But, if you have anything to say about that, feel free. But back to the kind of the topic at hand, like, what I've called this, you mentioned the square root, and back in February, I was talking about the modified square root, which means a square root starts low, goes down, and comes up higher. This one, in my opinion, starts and now a lot of people are talking about it, but I was talking about it back in February. It starts high, goes down, comes up, but never goes as high again. And I think that's the future we're coming into, where we see more concentration of wealth, more wealth inequality, but also maybe a good, to some extent, rethinking of our values, a little bit more of a simpler life to some extent. Instead of people jetting around the world, going to Europe and whatever, they're buying a motorhome and going camping with their family, right? So,
Yeah.
there are changes, and a lot of this stuff, I don't know, it's a different kind of psyche I think we're coming into. Do you think that's true?
No, absolutely. Look, on the economy, I think we're going to be permanently about 4 to 5% poorer. So I have surveys of firm expectations. You just see a downward shift in the level. So we're just not going to get back to where we were in 2019. We're just, it's like we've taken a downward shift and we're back to basically track, but we're 4 or 5% poorer. So we will forever now be 4 or 5% poorer because of the pandemic. That's a lot of money. It's a couple of years worth of growth. It's better than it was in the middle of this year when we were about 12% down, but yeah, we'll never get back to square one. And in terms of simpler life, I mean, I don't have any data on this, but yes, it's clear from surveys I've seen, there's clearly massive demand for business travel is down almost 50%. Leisure travel, I was actually looking today at something else, but flights are down over tourism right now is down over 90% in terms of kind of international travel. I personally think that's probably good. My sense is there's too much traveling around, it's putting out a lot of emissions into the upper atmosphere, which is pretty awful for climate. There's a big distortion that aviation fuel is never taxed. So just to be clear, because it's, as a plane, you can buy your fuel either in, in London or Paris, it's very hard for governments to tax that stuff. So it's effectively very cheap in comparison to driving your car. So there's a huge distortion in the system. So yeah, personally, if you could fly, I mean, I'm flying, I haven't been in an airport since March. I used to fly 20, 30 times a year, and I haven't been in
I'm the same. I was getting on a plane 2, maybe even 3 times a month, and I haven't flown since late January or early February. Yeah,
exactly. I'm happy.
It's nice. I know
it is very nice. So
it is.
I did with the Atlanta Fed. We've been running a survey called the Survey of Business Uncertainty, where we asked some other questions about 500 US businesses, and one of them we asked them about the future of business travel, and their forecast is it's going to be down by about 40% post-COVID, and one big driver is the number of online meetings. We asked them what share of meetings with external people like customers and investors was online pre-pandemic. The number's 15%. They said post-pandemic it's like 50%. So not surprisingly, a lot of stuff we just don't need to fly around to do anymore.
I couldn't agree more, and I think it's great that people have been forced to adapt to that, because it's just a lot easier, a lot less expensive, a lot more efficient. Which brings me back, and maybe we'll close with this, because you've really studied the working at home concept. I didn't ask you this before, Nick, but are people more or less productive working at home? This is, the $1 million question. Maybe nobody knows the answer because it's spotty, but what is your answer to that?
So, this is what I got into this topic working on that. I did a big randomized control trial on working from home like a decade ago with 500 people. So I give you this 2-part answer. In the short run, it seems like, which is doing the same old, it seems like people are actually more productive. And the reason is you work a bit more time because you basically save your commute. And you also are more efficient because there's less disruptions. So however disruptive you think home is, this is, not under lockdown. Under lockdown, I have 4 kids. So it's pretty horrible with kids coming in and out. But normally people are actually more productive doing the same old, as in short run productivity is higher. And, without boring you, there's a lot of different data and evidence on that. The thing that I think is problematic is what I call long run, which is being creative and innovative. And that I don't think works as well at home. And that's why after the pandemic, you need to come back in for probably 2-3 days a week. So, post-pandemic, you can think is a win-win. If we can come into work 3 days a week, it's good for businesses. People are more productive and, businesses are more profitable and we're happier off. It's very clear people prefer to work from home for a couple of days a week. Currently, it's kind of unpleasant. We're there 5 days a week and we got kids running around with sharing rooms, spouses and spotty broadband, etc. But, long run, one of the few upsides. In fact, the question I get asked endlessly by executives, and we were talking about it in the warm up to this interview, is why on earth didn't we do this earlier? Like Skype, right. Video calls and cloud and laptops and email have been around for a long time. I did a big project in 2010 where we I mentioned 500 people and had them work from home. We did it in a week. So, why haven't more businesses been doing that? And that's the question that comes up all the time now. But at least people are recognizing that one silver lining of the pandemic.
Yeah, absolutely. So I don't know if I got a clear answer on it. We talked about how the economy will be smaller, and I agree with you there. The world economy will be smaller. I mean, just take the tourism down a notch and the business travel down a notch, and suddenly a lot of economies get a lot smaller just for that alone. But with all the money printing, inflation in the future?
I've always worried about that. I had to say right now, the forecast from the experts, if you look at, without getting too technical, like tips you can get from market forecast prices of inflation, they don't seem to see much evidence for it. In the last month, there's been a bit of a tick up in inflation forecasts. They're still very low. So somewhat surprisingly, honestly, my own view is we pumped huge amounts of money out into the economy. We don't see any evidence of inflation yet. I pray.
And when we say inflation, there is already some inflation. We're just talking about much greater inflation.
Yeah,
right? It's a figure of speech. But
exactly right. We're happy with 2-3% a year. So prices go up. I mean, the Fed is aiming for 2% price increases a year. And look, if it's anywhere between 0 to 5%, honestly, it's not a problem. The problem is if it hits 10, 20, 30% and you get into, what happened in the 70s, or it gets way beyond that, you get Zimbabwe type where, the whole financial system breaks down. So we're never going to get to Zimbabwe, but, will we get to 5-6%? It's slightly worrying, but we haven't seen it yet. And so honestly, of the greater evil right now and the greater risk is the recession. And so I personally am on board with pumping money, but there's some, like any medicine, there is some risk of a nasty side effect. And I think you're right to highlight inflation. The other worry for me is debt, by the way. We're borrowing an enormous amount of money.
Oh, yeah.
And at some point, pretty soon, next year, particularly 2022, taxes, particularly top end tax rates are going to go up a lot to have to pay back for this. Because we borrowed, we're at all-time high levels of debt to GDP, above anything we'd seen after World War II, which until a year ago was the record max.
But still much lower than Japan, for example. And what's interesting is if you compare a country to a household, a household can prudently have much more than 100% debt to GDP or, debt to income ratio, right? Just the house that they own, alone, that mortgage will be maybe 3 times their income, for example, right? And then they'll have a student loan, a couple of car loans, some credit card debt. I'm not saying that's good, any of it, except the mortgage. That's okay because it's so cheap and it's actually a good investment. Why can't a country have a higher debt to GDP ratio like a household?
So it can. You're absolutely right. So, the US is right now at about 110, maybe hit 120%. To put it in perspective, Britain after the Napoleonic War was well above 200%. So America could probably double its debt to GDP level and get away with it. Of course, the interest payments go up because it becomes more risky. The big issue is at some point we're going to pay that stuff back. You can't borrow indefinitely. And as you know, if you're a household and you borrow for a big mortgage, you're making those payments for the next 20 years. And so every dollar we spend now, somebody, basically us in the future, our kids, have to pay that stuff back. And it can take a long time. So I noticed the British only finally pay back the last pound of Napoleonic debt about 5 years ago. It's quite astounding. Wow. That long. So they finally, what's it called, retired their last bit of Napoleonic War debt. So we will be paying for the pandemic stimulus. Us and our kids are going to be paying for this thing for the next 25.
But do we just retire the debt through taxes and, truly paying it back? Because I don't think that's even possible. I think the way we retire the debt is by inflating it away, right?
Well, I think, the Fed is going to make sure we don't inflate it away. Because if you inflate away the debt, you inflate away a lot of people's retirement savings at the same time. So we retire it in part by honestly cutting spending, raising taxes, and then slowly growing our way out. I mean, you can grow our way out. Look, if the debt stays constant and we grow, debt over GDP slowly shrinks. And if we also pay the debt off, it also shrinks. So I think it's just going to mean, here's the big worry for me. We get hit by another bad event in 2026. that we need, pandemic 2, or I don't know, a nuclear spill or some climate disaster, a vast hurricane that wipes out 4 cities.
Or an EMP or a terrorist attack.
Exactly, a sunspot. I mean, we just don't have as much money left to deal with that. That's the issue. So that's kind of Italy this year. So Italy had borrowed so much money the last time around for the Euro crisis. In 2020, it didn't have a lot of cash left, and it struggled much more with COVID than, say, the US did.
Sure. Yeah, it's uncharted territory. Nick, give out your website and anything you want to share with people, and any closing comment you have.
No, I mean, it's an incredible time. In my website, if you just Google search Nicholas Bloom, it comes up at Stanford. My closing comments is I would be nervous about, buying property in the center of the cities, go out to the suburbs. I'm personally also somewhat nervous about the stock market. I feel that it is overvalued. The stock market has diverged from the real economy in a way I've never seen before. So
I agree.
I personally wouldn't be long the market. I mean, I'm not long the market. I'm nervous it's going to fall, and I've taken.
So short stocks and short urban inner city real estate.
Yeah, that would be what I would do. Yeah.
And I agree with you on both of those counts. So Nick, thanks so much for joining us. Appreciate it.
Jason, thanks very much. Lovely to catch up.